What has changed in the last 6 years is this recognition that sustainable investments are just companies that are thinking about the long term.
Hello. Welcome to People, Planet, Profit, a podcast by EarthUP, where we aim to help businesses and people like you simplify sustainability. EarthUP's CEO Stephen Bay will be joined by experts, innovators, and lifelong adventurers to break down some of today's biggest topics affecting the triple bottom line of people, planet, and profits. What does a sick building do to your health? Why should corporations be invested in biodiversity? How can I help create better working conditions and happier employees at my company? We'll cover these questions and so much more in a candid conversation about reshaping work culture into a landscape that prioritizes people and planet without sacrificing profit. Our next episode starts right now.
Hey, it's Stephen Bay, CEO of EarthUP. Today's guest is Jay Lipman, the co-founder and president of Ethic, a tech-driven asset manager that powers the creation of sustainable investment portfolios and was described by Inc. magazine as one of the 6 leading companies making the world a better place. Jay, thank you for joining us on the podcast to talk investing.
Stephen, an absolute pleasure to be here.
I know you were in finance before Ethic. How did you really understand that Ethic was going to be the mechanism that really drove the change that you wanted to see in the world?
Yeah, I mean, it actually goes back, to when I was about 18. When I left high school, I decided that I actually wasn't going to go to college and I was going to very naively go and try and save the world by myself. As a particularly naive and privileged guy from England, I booked a one-way ticket into Central Africa and opted to working in an orphanage where I quite quickly got quite sick with malaria and realized that, being on the ground as, no matter how positive my intentions were, no matter how much I wanted to help, the realities were there was only so much I could do. And reality was, number one, I wasn't qualified. I was actually incredibly naive. And number two, I had these privileges that I just wasn't using in that capacity, right? The privileges of being from an economically stable country, the privileges to be able to go to university and actually get educated on how to have a bigger impact at more of a systemic level. And so I ultimately went to college and ended up in finance, where I realized that finance is this huge lever for change, right? If you can drive capital towards companies that do respect their resources and away from companies that don't respect their resources, you can actually fundamentally change the nature of the relationship between companies and the things they interact with, most importantly, people and the planet. At Ethic, what we try to do is to do exactly that, right? We want to drive capital towards more sustainable businesses and away from less sustainable businesses, and therefore change the nature of the relationship between businesses and, the people they represent, their employees, their customers, their communities, and the natural world that they have such a big footprint in.
It seems like you guys are pretty ahead of the curve. Do you want to kind of walk through the evolution of Ethic and kind of how you learned what companies wanted and what got you to where you are now?
The evolution of Ethic started when, we as founders, 5-6 years ago, realized that no two people share the same values. And so when you talk about the issues that people want to prioritize in their portfolios, some people do prioritize climate. Some people do prioritize deforestation or sustainable agriculture. Other people prioritize women's rights and racial justice, or, the quality of corporate leadership and the strength of how these businesses are actually run. And we founded Ethic because we realized that because no two people really share exactly the same view of what should be prioritized, we wanted to allow for personalization. And so we spent a lot of time early on figuring out how do we get people to define what it is that they prioritize, what is it that matters to them most. And then how do we actually build portfolios that reflect that personal view of, the priorities that really kind of matter and connect to us on an intrinsic level?
That's a hard thing to match views with profit. I mean, for specifically 6 years ago when you guys started, that wasn't as clean cut as it is now. Understanding that the ESGs really do lead to long-term profits, but you guys were kind of trailblazing that. So what are is there any specific stories that you have that, going through of, hey, we're trying to align your values, but how does that actually play into profit? Because you're playing around with people's money. So I imagine people take it quite seriously.
They do take it quite seriously. Thankfully, we take it quite seriously as well, because not only is this investing people's money, but it also is the issues that matter to us, right? We have to think about the systemic nature of climate. We have to think about the systemic nature of, which companies are exacerbating or profiting from racial injustice. And so the most important thing in the last 6 years is the myth that previously existed that this type of investing is concessionary has been repeatedly proven to be wrong. The terminology of sustainable is now being understood that it is not necessarily a company that is creating a solution to climate change. It is a normal company that you probably know. It's a large company acting in a way that is more responsible as it pertains to the resources it interacts with, right? And those resources are usually either people or the planet. Sustainable investments are just companies that are thinking about the long term, acting responsibly. They're the company that chooses to invest in the more energy efficient factory that is not in a flood zone, that is not going to be as affected by more extreme weather events, right? Versus the company that says, no, we don't need to worry about that. Let's not even consider that in our process. We have essentially, been very fortunate to, benefit from a lot more investors recognizing that sustainable businesses is another term for just better run businesses that are thinking about the opportunities and the risks posed by an ever-changing political climate, environmental climate, and social climate.
Something that we found fascinating, and I'd love to get your opinion on this, is when we launched our prototype, we had 2 Fortune 500 companies, and 86% of the employees wanted their 401ks and pensions invested in ESGs. And this is something that the companies had no idea about until we actually highlighted this information for them. And so, that's one of the biggest ways they can actually make an impact. Is that something that you're working with companies to do?
If people have 2 options, one is the way they've always done it. One is the product they've always bought. One is what they're used to. And if they're given a more sustainable version of that same product that does the same job, it's a car that drives the same way or even better. Or it's a product that cleans even better, but without the toxins. And it costs the same. People and consumers and investors are choosing the more sustainable alternative. That's the beauty of this entire trend. That's the beauty of this huge shift that's happening, is that consumers are now being given very clean alternatives where they're recognizing that it doesn't have to be a concession here. We can choose the product that does the job just as well as the thing we're used to, but without the negative detriments to the environment or putting, VOCs and toxins in front of our kids. We can actually have our cake and eat it too by having a product that's great, but also sustainable. And with 401ks, to your point, we're seeing employees recognize, well, I know that sustainable investments are going to provide me the exposure that I want to have, but in a more sustainable way. I'd rather have that. And that's why we're seeing that demand. And that is something that we're trying to adapt to, just because we're seeing so much demand come from so many different types of investments that at Ethic, we're trying to adapt as quickly as we can to those different types of demand.
People are starting to understand that they can make the choices that are best for the planet, and it's actually the best choice for them too. One of the things I would like the listeners to learn a little bit more about is exactly how does Ethic work? Who do you guys work with? If somebody listening wanted to jump on and find out more about you or actually participate on your platform, how does that whole process work?
Great question. We are a technology-driven sustainable asset manager. So we founded Ethic fundamentally to use technology to scale the ability to help investors to understand their values and then reflect those values in their portfolios. And the way that we do that is by helping those investors to figure out exactly what that priority is, whether it is climate, whether it is pollution, whether it is health and wellness, whether it's, women's rights. And we help them create something called a mission statement that is, really a representation of what their family cares about, what they care about, what matters to them most. We can then take what is known as the passive equity exposure in their portfolio, or that's typically invested in indexes or ETFs. What we can do is we can create cleaner alternatives of those strategies. To your point about, people wanting a sustainable version of what they've already got, what we do is we create a sustainable version of what a lot of investors already have in their portfolios. We create those with advisors. So much of the capital in, the US and globally is behind a wealth manager or, is behind an intermediary. What we do is we work very closely with that intermediary to help guide that capital to more sustainable, versions of those equity strategies. And we use technology to help the advisor and the client to engage with what matters to them and then how much impact they can really have around the issues they care about.
There's a stat that I heard recently that for every dollar that these buildings saved in energy efficiency, there's actually 59 cents saved in healthcare. So all these companies that are implementing all these energy efficiency mechanisms, nobody's even talking about the health benefit that comes from that. So how are you able to align the profit and actually show, hey, we're also accomplishing these ESGs? How do you make that tangible for your guys as consumers?
It's a sensational question because so many investors want to know what the impact of their investments not only are, but what they could be. If you demonstrate to them what the impact could be, then they're much more likely to move capital towards a more sustainable alternative. And so we focus on providing the performance, as you say, in two ways, right? The financial performance, which is absolutely crucial. Investors have to know that they are not sacrificing returns. They have to know that they're not increasing the risk of their portfolios by taking the more sustainable strategy, right? Just like when they're buying a car, they have to know, well, I'm buying an electric car, it's more sustainable, but it's also a better car. What we do is we provide that financial, which is the metrics the investor is really familiar with already, the performance. But then we do what we call impact reporting, which is quantifying the impact that can be had by prioritizing climate. And around climate, we can look at things like carbon exposure. So if you take $500,000 of your portfolio and transition it to a low carbon strategy, we want to be able to communicate in a language that we will understand. No one really understands what a metric ton of carbon is in the real world. So we try to talk about, well, but that $500,000, by transitioning it to a low carbon strategy, you are saving the equivalent of, let's say, 250,000 miles of driving a year. So providing equivalencies or quantifying it in a way that people can actually connect to their everyday lives is something that really does resonate with people. So we try to make it really visceral in a language that people really want to engage with and share.
So if somebody's looking at their investment portfolio and they're trying to make, hey, I really care about the S in ESG, right? The social aspect. What are some of the processes that you walk through with them to really help them identify the impacts that are going to actually affect the S?
Well, the S is sometimes harder to create a linear connection between the metrics, the issues, and what you're actually trying to solve. So let's use women's rights and racial justice as an example, two things that we've prioritized since day one at Ethic and believe that we've created something really impactful around, because with racial justice, for example, typically when you look at the S in the data sets, you would look at data like diversity and inclusion policies or discrimination policies and harassment policies. But if you actually want to address systemic racial injustice and the historic nature of systemic racial injustice in the US, you have to look at the industries that are set up in such a way that they are built to profit from and exacerbate those systemic injustices, right? So as you look at the S, you look at racial justice and you say, well, how do we look beyond diversity policies? How do we look beyond discrimination? Well, why don't we look at those industries that are set up to make this problem worse? Private prisons. Private prisons are a symptom of a broken criminal justice system that is systemically racist and incarcerates people of color at a dramatically higher rate than white people. We know that that industry profits from that and therefore has a vested interest in making sure that remains the status quo or actually gets worse. And so at Ethic, we try to understand not just the companies that are building private prisons, what are the companies that are profiting from this system? Because there's not actually that many private prison operators, but there's a public prison system that a lot of companies sell a lot of wares to, right? Who's providing the logistics? Who's actually transporting children from the border to the ICE detention facilities? Who's actually using the cheap prison labor and profiting from it, and therefore has that vested interest in maintaining that status quo? We try to understand the interconnectivity of these issues and be able to dive into the things that matter to our investors, because if they care about racial justice, they may not understand that connection to an issue like private prisons, but we try to make that connection, then use as much data as possible to inform which companies are and are not actually exacerbating that specific component of the issue.
What you just kind of unraveled there makes a lot of sense. For anybody who's listening in a sustainability department, like what are some of these first steps people can take just to start the awareness?
The first thing I would do is talk about addressing some of the myths that have been so persistent and prevalent that still exist when people are trying to communicate why companies should be more sustainable. Because one of the biggest drivers for companies is when they recognize this is not about hugging trees. This is not about having a peace sign or, doing yoga on a mountain. This is about running a better business. And the thing is, the reason that we never had, someone doing yoga on a mountain on the website, very intentionally, was because we wanted to make this day one about realizing sustainable companies will outperform less sustainable companies because they will get sued less for sexual harassment and racial discrimination. They will have better run companies because they won't take as many risks and they won't have such product failures. They will be more adapted to understanding how a changing climate is going to affect their supply chain and their consumers. And because they're actually recognizing that climate change is a real thing. And so for people internally at businesses to simply be able to communicate, look, sustainable practices are going to be better for the long term because they're going to save us money and de-risk the business. That's what's going to create the buy-in from from the leadership, because that's what they're driving for anyway. It's just better financial outcomes. And this, we believe, is a mechanism for better financial outcomes.
So what do you think the best way from an investment point of view is to protect biodiversity then? If you're trying to protect biodiversity, these are the things these are the companies, or this is the way we address that.
Biodiversity is going to increasingly become a topic of conversation in the general forefront of the general climate conversation, because we realize how entwined biodiversity is to our actual, ability to solve climate change. I think that as a corporate footprint goes, to solve for biodiversity, we have to look at the areas of the densest level of biodiversity, right? So we have to look at rainforest, we have to look at jungle, we have to look at this protected land, or land that should be protected, and then what corporate activity is the biggest threat to that. And this is where, our data does come in. What corporate practices are actually threatening the highly biodiverse plant and animal life in the Amazon, in Indonesia? And therefore we look at tobacco. Tobacco uses slash and burn tactics to clear forest land to create tobacco plantations. Palm oil, right? We know that palm oil is one of the biggest degraders of forest land because they use, again, slash and burn tactics, which lays waste to the entirety of the biodiversity in that area, and then they put in palm oil plantations, right? And we've seen that in Indonesia. We're seeing that increasingly in other equatorial areas. And then finally, cattle grazing. I know that a lot more people are cognizant of the damages of beef grazing because of the methane production and the various, the detrimental greenhouse gas emissions of that alone. But where do cows exist? They often exist in land, especially in equatorial regions, where they've clear cut the forest to create that land for them. And we're seeing that a lot in the Amazon, where they're again using slash and burn tactics to completely lay waste to the biodiversity that previously existed, simply to raise cattle because of increasing global demand for meat. As we look at biodiversity, we think about those big, large-scale corporate practices that really exacerbate and, obviously damage the ability to maintain the biodiversity that we don't have enough of already and we're already losing.
That's a great answer. So basically, it's not about investing in them; it's pulling investment away from them, right? It's like how do you choke out the investment going towards slash and burn tactics, and how deep do you guys go with that? Are you guys looking at how people do palm oil sustainably? Are you guys more just saying, hey, palm oil is an issue, or how do you guys kind of look at that when you're analyzing these different companies?
Well, we try to understand the companies that have exposure to the detrimental farming practices primarily, and the industries that we know are exacerbating or accelerating those deforestation processes. And so again, that is cattle raising, it is tobacco, it is palm oil. Sustainable palm oil is a contentious subject because define sustainable palm oil. So we just try to use as much information as we can to determine which companies are really actually making it worse or have exposure to what we know is a toxic practice.
What are some things that organizations can do, if they're Fortune 50, Fortune 500 companies, so that Ethic will recommend that the companies invest them and your portfolios invest in them?
Another sensational question. I think that there is enough evidence of companies making this transition successfully that people internally at these companies that are trying to drive this change don't need to be the first people to have ever done it. There is evidence, there is data, there is proof out there of what happens when you reduce the risk of certain legal actions because you have better diversity policies or you have better sexual harassment discrimination policies. There is proof that, consumers want to buy the more sustainable alternative. And so by being a first mover in certain areas, whether that is Microsoft announcing they're going to go carbon negative, whether that is Delta announcing they're going to be the first airline to go carbon neutral. Why do they do that? Probably, honestly, not out of the goodness of their heart, probably because they recognize they want to be that first mover because they know this is where consumer sentiment is going. And so if you're internal at a business saying, look, if these businesses that we know are some of the leaders in their space, we know that they're incredible marketing companies, and they're incredible brands, they're recognizing that this statement, being a first mover, not being a laggard, is going to help them in the future be synonymous with being someone that takes action on these issues. And that is something that consumers desperately want. We think that being internal at a company, pointing to those examples and saying, look, if it's good enough for them, I think we can do it too. You're not in isolation anymore. You're not having to reinvent that wheel. Pointing to that success, I think, is a helpful model.
It's a dangerous one, too, if you start to pat yourself on the back for things that you haven't quite done yet. Is there any risks around greenwashing?
Again, it comes down to transparency, right? If a company is saying that they're going to be doing something and leading in sustainability or climate, then you need the transparency to know if they're actually following through on that. And the only way to get that transparency is with data and information. And that's why here at Ethic, we focus so much on gathering so many, thousands of indicators and so many thousands of different types of data points to be able to understand if companies are actually fulfilling the promises they're talking about. Because again, when consumer sentiment goes this way, we know that companies are going to come out and at least try to take the baton of being more sustainable and being more regenerative. And we're seeing that. But data and information is going to be the only way that we actually determine whether or not it is or is not greenwashing.
Would you say that investing sustainably is a risk at this point, or is it proven that this is the way forward?
I would actually say the opposite. Let's look at a normal investment, an index strategy. It's 500 of the biggest companies. It's 1,000 of the biggest companies. It's companies in a certain sector. It's companies in a certain economy or of a certain size. That is pretty simple information to be building your investments out of. I'm going to invest in 500 big companies. Sustainable investing, ESG investing, is saying, well, I'm going to look at those companies and I'm going to use a lot more data and information to determine which ones I think are risky, which ones I think are not planning for a changing climate, which ones I think have not got a sustainable enough production process, or are taking too much risk because they're getting sued for sexual harassment every 3 months, or the CEO keeps on going to jail. That is the kind of data that we can use as sustainable investors to say, I actually want to try my best to mitigate the risks in my portfolio by using more information to know what those risks are. Otherwise, you can just ignore that data. And that's what a lot of these indexes are. They're just less information investing. And so we think sustainable investing is a way to try and mitigate that risk so that we can build portfolios that are around in 50 years so that we can give those, investments to our kids.
That was a great answer. Something that we saw recently with GameStop is the Reddit community is really driving investment. And how does that really affect sustainable investing in general?
The collective action that we're seeing with Reddit is essentially the democratization of information, the democratization of the ability for these smaller investors to compete with some of the larger pools of capital that have been able to dictate the direction of the market in some capacity in the past. We believe that as the collective becomes more cognizant and recognizes more of the issues that we're facing, they'll be able to drive capital towards those companies that they believe are doing the right thing as it pertains to the issues that matter most. Ability to bring people together to invest in single securities or single companies based on those narratives will eventually coincide with the companies that are trying to solve climate. One of the best examples is the fact that Tesla is kind of the original Reddit stock, right? It's kind of the original story stock. Like, people bought into this vision of this man who wanted to accelerate the global transition to sustainable energy. And he did so by creating what is basically a distributed energy company that makes cars. And that company has just absolutely flown because that community has really backed him as direct investors. That story stock, that narrative has driven that. We believe that's going to happen with other companies. And now you've got him as one of the wealthiest people in the world. The wealthiest person in the world should be trying to solve climate change. They should be trying to solve the biggest issue facing our entire planet in the history of our planet. That makes sense. And I think that community is really going to engage with that narrative and the importance of it and get behind the companies that are doing that in the future.
Well, it's also a great story to follow in the sense of, if you want to become a billionaire, right? How do you do that best right now? And it would be great if there's 100 billionaires that are all supporting climate change and all trying to solve those problems. And if they're able to make money out of solving the world's problems, I think that's a great thing. Tesla has something like 1 or 2% of the entire market share for cars. And you look at the value of them versus these other car companies. Are you seeing that in other areas of the stock market too, where somebody who is really good at branding, really good at pushing their sustainability, they might not have the same data when it comes to sales and profit, but that they are a company that is trading at a really, really high level?
I think that we're seeing it more with new entrants to the market. And I think we saw this with Beyond Meat. That was such an exciting company to investors because it was novel insofar as it was a synthetic meat or an alternative meat company. But the climate narrative was such a big part of what drove them. And I think we're going to increasingly see this with private companies that do become public, is those companies that have an underlying sustainable story. We think that these companies that have that underlying sustainable story, or at least are recognized for their sustainability and that being imperative to their mission, are going to have some form of halo effect in that consumers want to engage with those companies, and then they'll get a virtuous cycle of that recognition, that publicity from the Reddit community that will drive more consumers to those companies and create that virtuous cycle of support.
One last question for you today, Jay. What are you guys doing at Ethic in regards to your sustainability department? What's something new that you guys are adding? What is something that you guys do when it comes to sustainable policy?
Well, we're a smaller company, right? We're 30, 40 people. And I think that every company of every size can be doing more around their sustainability. The reality is we're a financial institution. And so we don't have a supply chain of products that we're creating or manufacturing in a different country. We don't have packaging that we can make more sustainable. So we think about the human capital and the sustainability of really our team. And I think that we were recognized in 2020 for being one of the leaders in diversity in asset management. We prioritize diversity as a business and have been recognized for it. And some of the practices that we've done, I think, are really simple and really really important for startups. And one of the most important ones is so many startups rely on their network to hire, which means that your community become your hiring base, which means that your hiring base, they look like you and they have the same backgrounds as you in many instances. Really investing in ensuring that when you are hiring, actually looking as far and wide as you can at people from different backgrounds, from a multitude of different arenas that may not be within your immediate purview, is actually a really valuable way to ensure that you're bringing in the most diverse possible team, both in thought and in other capacities.
So we're going to jump into the quick hitter responses right now. What gets you up in the morning?
Honestly, the issues that we work on, right? I'm lucky that I have a job and a purpose that I get to work on: climate change, soil health, racial justice, women's rights. Like, these are the things that matter most to me. It's what I read about on the weekend in my spare time. And I'm lucky that I get to spend, my time trying to solve them and think about how we actually solve them at a systemic level.
What's your breakfast beverage?
Ooh, black coffee. Black coffee very importantly, made in a stovetop mocha, which I discovered during the pandemic, which is the little Italian stovetop espresso maker. During the pandemic, moved to a goat farm by myself, was the only way I could make coffee because I didn't have a kitchen. All I had was a little hot pot thing. And so that was my coffee maker of choice, and it has been ever since.
When I was a goat farmer, making coffee. Yeah. What book would you recommend for the listeners?
The number one book, I know that you love it as well, is Drawdown. As you think about the ways that we can actually solve this crisis, I think it is the most important piece of literature around this topic that's been published, and love Paul Hawken and think that he's one of the most important thinkers in the space.
And anytime you give that book to somebody, it's just so digestible. You could give it to the person that hates sustainability. Everybody seems to relate. It's bite-sized. It's one page, all the economic benefits. Oh, I think that's a great one. One thing you would recommend that somebody does in their daily routine that you do that kind of helps push forward this idea of, being ethical?
God, there's a lot of pressure on that, but I think, and I know it seems probably a little contrived, but meditation is something that matters a lot to me and has done since for many years, and that I try to instill in the company. And we got the Calm app for the entire team, and just taking 5 or 10 minutes, even just to sit in silence, to really kind of not be as reactive to everything that happens in the day, and just think, what am I trying to do here? Why am I here? And what we're here to do is to solve these problems. And so every time I sit for 5 or 10 minutes at the beginning of the day, in the middle of the day, at the end of the day, I get to think about those things.
And then is there any technology that you're really excited for?
The thing that's been most exciting to me is just the regenerative coral growing practices, and people that are actually effectively regrowing coral at a faster pace. I mean, ocean acidification, ocean health, we are staring down the barrel there, and anything that can be done to reverse that process, or at least maintain the biodiversity under the ocean, I think is crucial.
I think that's a great one. Jay, congrats on all the success that Ethic has had, and I wish you guys more continued success, because that means a better planet for all of us. So thank you for joining us today.
Stephen, an absolute pleasure, and we're big fans of EarthUP and keen to keep watching the journey.
And that's our episode. If you'd like more info about what Jay is doing at Ethic, visit ethic.investments. And we're excited to share that EarthUP is now live. To jump into the platform and start making change at home and work, go to app.earthup.eco. Become an early adopter and help us create an easier, more effective, and more fun platform for our community. Thank you so much for listening in and for your support. If you like our show, hit that subscribe button, tell a friend, and rate and review us wherever you get your podcasts. Your support helps us reach a wider audience, so thank you. To learn more about EarthUp and our journey to launching our new platform that's helping companies and communities simplify sustainability, visit earthup.eco and follow EarthUp on LinkedIn.